All right, guys, what's going on? It's David here, back with David Alexander Capital Management. I wanted to hop on for a spontaneous video. Like I said, this channel is about just talking for the sake of talking. I'm not here to sell you anything. I'm not here to sell you any stock. This is about me being able to just communicate what I'm thinking and then have a record that I can come back and stress test. Was I right? Was I wrong? And why? Okay, so real quick disclaimer, not financial advice. I'm not an advisor. I don't know your situation. Stocks are risky. You get it. I reserve the right to yap. I love to talk, and especially about stocks when there's nobody that can stop me from talking about it. Okay, so we've been talking about Chegg, and this is an update. It's a July update. So I made a video in May, basically talking about the case for Chegg. Okay. And the case for Chegg was actually, it got like 150 views, which is on the higher side. I got some good feedback, got some connections with fellow Chegg bulls, and we've been kind of going back and forth about different ideas. Here's the thing: Chegg has earnings August 6th, right? So that's about 2 weeks away. So there's not much I can give as an update, but there are a couple things that we need to discuss that kind of gives us a better idea of Chegg's outlook. So how are we going to organize this, right? Well, we have the 7 levers that I mentioned in the other video, right? And those levers were the margin of safety with the valuation, the scaling business, the study, producing cash, the lawsuit, the activist, the data set, the network, right? So what has changed? Where do we have some updates, some traction, some ideas? Well, we're going to talk about the margin of safety. We're going to talk about the lawsuit. We're going to talk about the network. Okay? We have actually had some things here change that informs our decision. So first, let's start with the margin of safety. At the time I was recording the video, okay, Chegg had a market cap of $150 million. Now, Chegg is a very volatile stock. If we look at a chart of Chegg, and we're gonna use Fiscal AI. Guys, you can sponsor me. I pay you guys a lot of money. Okay, if we look at a chart, it's been kind of chaotic, right? So you can see we kind of ran up, we came back down. At the end of the day, margin of safety, right? What does that mean? Value investing. Do you own it at a good price? Well, in Chegg's case, like we said, because it's so cheap, so disconnected from reality of what's happening, there's a very large margin of safety. Why is that? Well, I could buy the whole company today for $108 million, right? And then remember, based on the last quarter, they have $34 million in net cash, right? So 108 minus 34. So let's just round that up. 110 minus 34. What is that? Like $76 million enterprise value. You can check me on that. But so the margin of safety has increased since the last time. And what does that mean? This is a really interesting concept because so basically what DACM is it's me as a young ambitious guy who's interested in markets, trying to have to think about investments not like it's just my money, but like it's other people's money. In this case, it's my family, because they have trust in me and they are willing to give me a little bit of their capital to invest, right? So basically, in this kind of span where Chegg started its decline, I was adding, and I had a really good conversation with my brother because he's like, why are you adding, right? Now, he did say he trusts my intuition, which I know he does, but that's like when you add to a stock when it goes down from the outside, if you haven't been in the markets for a long time, that kind of looks like a bad idea, right? Because the value is going down and you're becoming more aggressive. Why do I do that? Well, first of all, when you start reading about books and you read The Best Investors, you realize that you kind of have to do that. You have to switch your thinking. But also, and this is a very interesting thing in my opinion, Chegg is a diversifier. What does that mean? Okay, the current value of the business is $110 million, let's say. You have $34 million in cash. That means that for every dollar I put in Chegg stock, I'm actually diversifying 30% cash, 70% stock. So really I'm buying 30% cash, 70% stock, right? So it's not like I'm putting 100. If I'm buying 100 shares of Chegg, it's not like I'm buying 100 shares of just the business. I'm really buying $30 of cash, $70 of the enterprise value. So that makes me more comfortable because I know that there is a floor, and that's where the asymmetry is, right? And what makes it interesting and why I'm still so bullish is because the floor will only get better because they have 60% gross margins, and Chegg Study still pumps out cash like a machine. So as time goes on, that floor comes up and up and up, and the margin of safety increases. That's the first thing. The second thing is the Google lawsuit, I believe I said, right? The Google lawsuit. So what happened with the Google lawsuit? In terms of Chegg's specific lawsuit, nothing, right? But we did have a breakthrough, you could say. We did have a legal precedent occur. So I'm going to go here. You guys should follow my guy, DC Chilling. Basically, anything that is Chegg related, he will have seen it. Let me see if I can find this post. But basically, there was a ruling in Europe about a Google lawsuit, okay, with another company. Oh, here it is. So, Klarna sued Google because Google put their tool, basically, above Klarna's. Does that sound familiar to anybody? Google putting their product above another product, which diverts traffic to the other product. Does that sound familiar? Okay, thank you. Chegg AI overviews, right? The AI overview lawsuit. So Google is supposed to pay them $1.5 billion to Klarna in antitrust damages in Sweden. Now, I know what you're going to say. European court, yes, they love to sue all of our companies. I believe that Europe makes more money suing US tech companies than their actual tech companies make. Like, I'm pretty sure that's true, which is kind of crazy. So I get that. What I'm trying to say, though, in terms of Chegg, that doesn't really matter in this case. What matters is that we have very, like, almost a carbon copy of the legal precedent, okay, that Chegg is currently litigating with an anti-Google judge in Judge Mehta, okay? So $1.5 billion, if Chegg got that, right? That would be like $15 a share in just cash that's entering the account. That has nothing to do with the AI services business, which is likely going to be relatively successful if we think about it in any, large capacity. So that's the lawsuit update. Basically, there's traction. We also heard that Reddit is considering breaking things up with Google, again, because Google's putting the AI overviews above Reddit's website, diverting traffic from Reddit, okay? Now, is that really going to happen? Probably not. They'll probably renegotiate for a bigger deal for data. Again, though, that is showing us that, like, Chegg has very similar assets to Reddit in the sense that it has data that's valuable for models, right? So that's more precedent. So you see how we have a lawsuit that's actually kind of getting that got traction. So that's the Google lawsuit update. And by the way, like, again, margin of safety, right? What if it was $500 million? $5 a share. That's 500% from here. Was that 5x from here? 600%. So the margin of safety. Again, the margin of safety, guys. That's the Google lawsuit update. And then the network update. So what's the network update? I had more time to think about, and now I'm getting ads. Okay. I've had more time to think about the network. Okay. Okay, just random stuff on X. And I think we'll just kind of riff here. I don't think I have anything to show for this, but the main idea is we talked about how there's like most like we're still at the point where people look at Chegg and the most things you'd probably see on Twitter about Chegg is how AI killed the business. Again, that's a moot point. Nobody's debating that. We're talking about the pivot to AI services and what that means for the stock. Okay, what you have to realize is that there are two companies, Scale AI, Surge AI. Okay, these are companies that train models for AI. Companies, they create training data, and the process for creating Training data involves having people who can solve certain problems, certain STEM problems, for example, and then they train the model the way that they would train a human, right? And I think Scale AI is valued at $30 billion. Okay, so $300 a share in Chegg's equivalent, right? 300x from here. Guys, I'm not saying Chegg will go to $300, but I'm saying that if you execute, right, 1% of that, 2% of that, 3% of that, right, you're 9x above the current price of the stock, right? We don't need to 300x our money, okay, but they just need to have like 5% success, and it means a lot, okay? Eric Menuevo on LinkedIn, okay? His title is founder SVP GM of Chegg AI Services. So digging into his page, we see more clues than what that press release told us initially. What does that mean? Okay. You put out a press release, you got, 200 words, and that's it. Look at what he said here. We're going to look at this, and then we're going to look at a post he made. Founder and SVP GM Chegg AI Services, leading 0 to 1 formation, launch, and commercialization of Chegg's foundational data supply chain, expert calibration infrastructure for frontier AI labs. Responsible for full venture P&L, GTM product strategy, and global operational delivery. Chegg AI Services is the only expert in the loop and data quality infrastructure built on a decade of industrialized operations, providing the complete calibration framework for frontier AI. We combine a pre-built 1 billion plus artifact catalog, a global network of 250,000 plus calibrated domain experts, and proprietary multi-layer QC pipelines to deliver model-ready data at an unmatched scale, the only complete data and calibration infrastructure for frontier AI built under SEC-grade operational controls. Guys, they're smart. This management team is very smart because they are very stealthily, right, launching this AI services. The press release that they put out, though it was a good press release, it wasn't that detailed compared to what this is here. The press release kind of gave off the vibe, if you're a banker and at Goldman Sachs, or you're an analyst, whatever, it gave off the vibe, if you read that, okay, they're gonna see if they can take some of the data that they had over the years and kind of enter this business. But once you read what is happening here, it becomes very clear that they're very serious about this business and that they have the assets to be in this business in a way that, Allbirds, which went up, 20x in a day, did not have that, right? So, and why I bring up Allbirds is because we're seeing companies in this market that do not have the resources nor the infrastructure to enter AI businesses, saying that they're going to enter those AI businesses, and then they go up 10, 20x in one trading day. Okay, so what does that mean if, in Chegg's case, they actually have that? So, to simplify it, right? It's imagine you're a private equity guy, and you walk in, and there's I don't know, whatever, weird scenario. It's a restaurant, and basically they're trying to make burgers, but everybody in the town likes pizza. Okay, so if they have a pizza restaurant, they'll make more money. Just a stupid example. Okay. Let's say you walk into the restaurant, right? And let's say that if they started making pizza instead of burgers, they'd be worth $10 million instead of $1 million, which they're worth today. You walk into the kitchen and you're all right, let's take a look. They have dough, tomatoes, cheese, and an oven. You're wow. You have every single ingredient you need to, within a short period of time, hire people, month, 2, 3 months, to be worth 10 times more. So what do? I buy your business for $1 million. I start that business because you have all the ingredients. It's not going to be much work for me. And then I'll sell it for $10 million, make 10 times my money. That's what's happening with Chegg. Okay? What people They don't get it yet. The market doesn't get it yet. Eventually, they're going to get it, and we're going to be, I think, celebrating. Um, the homework business. What did the homework business have? People ask questions, subject matter experts solve them in a structured way and give it back to the student. Well, how do we train AI models? They need to have a training data set. They need to have questions that are solved, right? So they train on how to solve it, and then they test the model. Training data set, testing data set, right? They have the experts, they have the infrastructure, they have the leadership now, they have a cash to fund growing that. Guys, like, I mean, if you don't see that, then I don't know what to tell you. Basically, that's the Chegg update. If you don't see that, I'm not sure what to tell you. I'm not here to convince you, but that's the way I see it. And what's interesting is when we think about the exit strategy, a buddy of mine, he decided to put some money into Chegg. And he asked me about the exit strategy because he's like, David, you're talking about $5, $10. Well, when do you sell? First of all, you sell when you feel comfortable selling, which is not the answer anybody wants to hear. But when to sell is harder than when to buy. But the thing about Chegg that's really exciting is that it might not be, it could be an Allbirds. It could be, they have a good press release, it jumps up 10x and then it comes back down to, let's say 50%, and now it's only up 5x, which is still great. It might be that. Or it could, a stock that was down 96%, but then they entered a new, they were able to restructure. It wasn't a new business, but you know what I mean? And look at that, you're up like 6,000% from the bottom. It could be both. It could be a big special event jump. It could be a big acquisition that buys them out, so it jumps and that's it. It could be a secular growth trend. They go up and then, see you later. We're never coming back to these levels ever again. It could be a spin-off if Galloway gets his way. It could be a, sell off the skilling assets, go all in on AI with the cash you get from the skilling assets. By the way, now that I'm saying that out loud, if I was in the Chegg room, which they're much smarter than I am, they don't need me in there, but if I was in there, I would probably say that that's what you do. You take Busu and Chegg skilling, or maybe just Busu, because maybe you keep Chegg skilling, but definitely Busu you can sell. And if you can sell that for like $300 million, which you probably can, because the growth they're having in Europe is phenomenal, like 28%, 30% B2B growth in Europe. If you can do that, you take the $300 million in cash, you invest like hell into that AI services business, and boom, you start training models like it's your bread and butter. You become a third player in an oligopoly of two, which gives you the potential to disrupt and to make a lot of money. Okay, that could be the way it happens. So that's the update. I always think I'm gonna make this like a 5, 7, 8 minute video, and now it's an 18-minute video. But if you guys are here, most of the guys here and women and guys, most of them that are here, they're long Chegg or very serious about that, so they bear with me and they listen. So guys, that's the update I have. Earnings are in 2 weeks. The last thing I'll say, which I thought was interesting, is that for the first time in a very long time, the earnings are before the bell, not after the bell. They're in San Francisco, which means that they're probably Dan Rosenzweig is probably getting up at 4 a.m. to drive into the office, prep everything, and be on a call with investors at 5:30 in the morning. So look, is there something he wants to announce? I don't know. Tinfoil hat type of thing. But look, at this point, been in this stock 1.5 years, almost going to be 2 in November. Good things take time. And if the upside is here, that I think is here, and the downside is limited, which it is because of the cash that keeps growing, I'm willing to wait. If this is a 5, 10x opportunity, I don't care if it happens today or if it happens in 2, 3 more years, because you know what? If you get a 5x, right, the S&P doubles in 7 years. So I just got 35 years worth of returns. My CAGR will be phenomenal. Food for thought. Guys, it's been a pleasure here. Feel free to subscribe and like the video, leave any comment, connect with me on LinkedIn if you want to talk about Chegg, and I'm gonna see you later. Bye-bye.